Welcome to the end of day review for Thursday, the 23rd of November 2023. Kicking it off with some news. I guess the news calendar. As I said in my outlooks, today was Thanksgiving, so the the New York session was quite low volume. However, we had a bunch of high impact Euro and GBP news. Looking at the Euro, there was some positive and some negative news. Um, However, I'd say it's more skewed to positive than negative. Um, Overall, longs did seem to be what made the most sense. From a GBP perspective, longs was the only direction that made any sense and was in line with our trade ideas for the entire day. Um, what I'll do is I'll start off with my live reviews for Euro USD, and then we can essentially go from there. In terms of 4H market structure, what you will be able to see is that 4H has a clear bullish confirmed market structure. In terms of order flows, there was a change of character and subsequently supply did hold into the pro trend extreme. Coming into this morning, we were in this pullback phase, last point of supply. At this point, we were considering shorts temporarily, and then considering the triangle because there was reasons to trade both directions. However, what then subsequently happened while we were waiting for the Asia range high or low to be taken out is that the next 4H candle on the Frankfurt is that the 4H candle essentially body closed by 12, essentially body closed by noon, thus invalidating shorts and validating our primary OB. In terms of longs, so the pro trend extreme had reason to long up until the substructure. Once the substructure was taken out and wicked, then it validated the primary OB, and thus creating this primary leg. From then we pulled back into this primary OB, and now going forward we would anticipate that price would continue towards the 4-8 swing structure. Diving into the 5 minute, as I said, we were waiting for either the Asia high or low to be taken out. The high was taken out, and whilst that occurred, what we essentially had to do was wait for price to get back into the range. However, at around 11, when this occurred, we were essentially still awake on the 4-hour, so there were still reasons to consider shorts. However, with this being the new high of the day, and there being no reason on the 15 minute, 30 minute to support why this should be the high of the day, we essentially had to wait for a full order flow shift, right, in full control validation that supply was in control in order to play this. However, by the time 12 o'clock came, it was confirmed that this 4H OB failed, and thus the short narrative has failed, and there's no reason to continue shorts. For that reason, we essentially had to wait till we got into this 4H primary leg OB that is part of the pro trend leg, and when price got in here, we were waiting for a realignment of order flow. The low of the day of Asia in the extreme, just measuring that out gave us this discount area to focus, and this is the optimal area that I've marked out right here. As you can see, we did change character, however we didn't hold or anything of that sort to support taking longs prior to the end of the trading session. That's essentially the Euro USD review for today. And then in terms of GBPUSD, which I actually did get an entry, what we can start off with a 4-hour as usual. in the morning when we started off, we essentially were quite long biased, but we also knew that there is this flip and head. Once the 4 hour candle body closes this, um, then there's reason to long and short, right? However, what then subsequently happened, because when we wicked, we identified buy to sell wicks, because the rationale being we don't understand or we don't know if this wick is a break or is it just a liquidity grab. We thus identified the buy to sell wicks to help us validate what the meaning of this is. What you'll see once I drop down to the 5 minute is the Asia session essentially took out the buy to sell wicks from the 4 hour, and subsequent to that, it was quite obvious the direction we wanted to trade in, and we targeted the 4-8 swing structure. If I hop down to the 5 minute quickly, what you will see here is when Frankfurt opened, we were I guess similarly to EURUSD, we were waiting for one side of the Asia range to be swept. The Asia range was subsequently swept in Frankfurt, and then as you can see, we created a nice demand chain over the back of this primary leg that has formed from the reaction or the sweep of this 4H OB. Then moving into London then cleared the Frankfurt session range, which then gave us reason to trade. I used my fib levels from the low of the day to the high of the day to identify a good discount area to trade from, lining it up with the POIs. I managed to get a nice entry here at around the 38.2 level, with my stop loss at around 10%, and the reason for that is just because what you can see is the low of the day is quite far. Price has moved quite a distance away, and for price to come all the way excuse me, for price to come all the way down here, it's more likely than not it's going to take out the low of the day and make a new low of the day, in which case we would be wrong either way. So why take the RR hit unnecessarily, right? Anyway, what then happened is I did take the entry with the stop loss, but instead of setting a target, I left the target open, which then came in GBP PMI news, which was positive and led to this big candle. My actual target, had I set a target, would have been this level. It's around 1 to 4. However, because I didn't set a target, I essentially said that everything supports the trade idea, even the news supports the idea, so why not target the 1 to 5? And that was around this point I realized that, hang on, we can actually target this. So then I went and I essentially set this target and left the trade open, and currently it's still open. But I can't help but feel that perhaps I was a bit greedy, because a similar situation happened yesterday with USD CAD, where I left the trade open, I didn't properly follow my trading plan, and I watched the trade come all the way back to my break-even point. Currently this trade is now at 1.86, and it's just disheartening, to be fair. So what I'm doing now is I'm waiting for the next 4H candle to close, because the anticipation was, okay, there were many bullish candles, so it needed to rest, and this next candle, which closes in the next 15 minutes, should close bullish. But there's 15 minutes left, and what's the chances that price is going to push up this much and actually close bullish? So I'll assess how this candle closes, and then I'll probably just close this trade. But yeah, I guess it's a lesson. The other protocols that I haven't been following is my risk management. So my risk management plan states that if you get to a 1 to 5, you should partial in order to build some extra equity if you're starting from a zero balance account, or if you're in drawdown, because to see price come all the way down without paying yourself is a bit silly. And perhaps, these things hurt, but they also teach you lessons so that you don't do it again. Looking back, yesterday and today's trades would have easily taken me out of drawdown, but I guess here we are. So in the future, I'm just going to accept my targets rather than hope that price will go back and take out this liquidity. Look, chances are tomorrow it will take out that liquidity, but does it make sense to leave this open? Probably not. So that's my view at the moment, and yeah, I think we will go from there. The trade made sense, everything was clear. Maybe just to elaborate, so in terms of the target, this 4H OB has achieved its target. However, the target for the purposes of pro trend hasn't been achieved, and once we wicked this, we essentially validated this secondary OB from this ERL OB. So when we get into here, into this OB, then we validated this wick as a new target to, well, sort of a substructure target to target for this particular OB. Okay, yeah, that's essentially my end of day review for today. What I'll be doing next is just some fresh end of day markups for my reviews. I won't talk in that, and yeah, I guess you can watch me mark it up, or if not, we'll chat again tomorrow for the London outlook.